In this video, we're going to be discussing the IRS summons in conjunction with an IRS audit. As you go through the audit, IRS will typically send a summons, or at least first request from you information through what they call an information document request, an IDR. So at the beginning of the audit, IRS will issue you an IDR, and it'll have a list of records that they need. If you don't respond to those, IRS can send summonses out. IRS typically does summons your bank. So if you don't intend to give your bank statements, or if you have any questions about whether you have to produce all of your bank records, which includes your bank statements, your canceled checks, and your deposit items, just be assured that IRS does not have to go to court to get a summons. The revenue agent can actually issue a summons, send it to your bank, and within 30 days they will get your records if the accounts are available. Now, IRS typically conducts audits less than 3 years from the date of filing because there's a statute of limitations. The IRS has 3 years to audit you, and that's 3 years from the date you file your return, typically. It can be extended if IRS finds a gross understatement of tax. It could be increased to 5 years, or if there's fraud, there's no statute of limitations at all. But typically, getting back to the issue, if IRS issues a summons, IRS typically, and it can be to a bank, it could be to a business associate, it could be to a company you did business with, it typically is associated with income. We haven't seen too many summonses in connection with an expense. However, we have had some clients that deduct large amounts for rent, and we've seen summonses go out to the landlord to request all the copies of checks that you have paid for rent to your landlord. And it could be because they're trying to determine where's the source of your income coming from, especially if income is an issue in your audit and IRS sees a lot of expenses being paid, but they don't see those expenses running through your bank account. They might want to know, is there another bank account out there that you haven't disclosed? So just as a summary, the IRS can summons your bank information and send the summons to third parties. They don't need a court order. Usually when they send it out, they provide you a copy. Typically, when we work audits, we request the revenue agent contact us before they send the summons out. Now, it's not our obligation, it's not the IRS's obligation to not send the summons out if we request that we work with them and first provide those documents. IRS has the duty to do that and truthfully the right. They can summons any type of information because the powers of the IRS are fairly broad to collect and to investigate. It's anything connected with income and expenses that are reported on your tax return. So hopefully this information was useful to give you a little bit of understanding about the scope of the summons. I'm John Milikowsky, founder of Milikowsky Tax Law. If you have any questions, please feel free to contact us. And I hope this video was useful. Thank you.